Hello, friends. This is E. Giuliano, and we are nearing the end of day of 4th of March, 2022. Well, this update is for the BTC pump update. We are no longer in this count, I think. I think this count, this BTC quick failed fifth wave reversal has been invalidated. Unfortunately to say, because I was very excited about what was coming and what was happening. I thought, wow, what a big move. This has got to be the bigger, faster move that starts something new. I mean, there was this potential fifth wave that just got completely reversed. And not only was it completely reversed, well, you know, it was basically reversed here. So that's the challenge that we're in, because it got reversed by more than a 61.8% retracement. And in that sense, this move was very big and potentially reversing. Well, it's not that case anymore. And this is the reason why. Is because, well, when I was doing the video, wow, what a contrary indicator that was. I was talking about here and looking at potential targets around the 200 moving average up here, and at least the 46K level. We didn't even reach that. And quickly, but you know, trading over this 2 to 4 trend line was a very, it was a big, how do you say, deviation to trap a lot of people, and there it is. So there you go. I think we can say that this 5 wave here, this wave 5, it's not that. It just does not seem to be that, because, okay, here's the thing, is that as we retraced this move, that's fine. The first retracement here, potentially some sort of like a 1-2 wave. Even if we go top to bottom, wick to wick, it's about a 50% retracement. So that's good. You're still a trending wave. And this wave here, it's all good, even at around 40K. It's all good, even at a 40K. We'll even start at the green candle itself, okay? Even at a 40K, you're still a 61.8% retracement. And wow, even, you know, the thing is with crypto, 78.6 is so common. Anyway, okay. So yes, there you have it. I wanted to check that out. What would be the daily candle closing? And it is around that 78.6 retracement of this green wave up here, nearly touching the 886 retracement. So will there be an intermediate reversal? I believe so. You know, we have this kind of price level here that acts as support. So I think it'll get a weak bounce up into the Ichimoku cloud, and especially to retest this 20-day moving average. But holding the 20-day moving average would have been fine too. You know, it's all about that roughly that 61.8% retracement, because if you don't retrace more than 61.8%, then you are still in a trending move, and then we could reverse off of there and continue higher, and that would have been the move. Everything was good until this March 4th candle. And the other thing I want to recognize is it reversed with increasing momentum. It wasn't a big candle and then middle candle and smaller candle. It's the reverse. Big candle just came last. So in that sense, then this is okay, because it has told us that the previous thinking is in fact more correct for now at least. Okay, so again, none of this is financial advice, and you know, at this point, in just for me, these price levels are the target, have been the target, because of the length of this potential third wave. So whatever is coming down here, it's like, I don't see why not. Okay, that's a long-term buy, in my opinion, and that's just a humble opinion. I don't, you know, whatever. So anyway, this is good. We've invalidated this count, this failed fifth wave count of a flat pattern C wave. is invalidated. That was a real sense of euphoria there. I think it's a great reminder that looking for confirmation is a great way to mitigate risk. So having real proper confirmation, and the euphoria was quite fast, because I think also not expecting to have such a big bounce off of a higher low here really changed the sense of things. And yeah, so there you go. So what are the other two counts? Okay, we have one count on one sense, which is still possible flat pattern, and that will involve the terminal impulse. Then we'll have a not flat pattern C wave. We would still keep ourselves in a C wave, and but it would be of a different corrective pattern, not a flat pattern, because it wouldn't be a 5-wave impulse. It would be building something, a different construction. And I'll show you what I'm thinking. So thanks for being here. I hope this is going to be helpful for you to navigate what's happening. And I guess at the end of the day here, the change of narrative, there's still a lot of uncertainty in the world. And so I think it's showing in the chart, and that means the chopping nature is more likely. And in fact, interestingly, both counts, whether it's the C3 or a C5, both counts are going to involve the chopping triangulation type of action. So let's take a look. We're going to load first the trendline touch points and just take a macro view. That's where we left off last time. Okay. So last time we left off here, and the basic thought that I'm going with here is, doesn't matter what has come before, doesn't matter necessarily what's coming after. Currently, at least, we are in a corrective pattern because the waves are overlapping each other and they're not trending. So it's a correction. Is it an ABC flat, which means it's completing and it's near its completion? Or is it the ABC of a 5-wave, like a triangle, or a 7 or 9-wave pattern, as per some Neowave logic and theory? Well, let's take a closer look. We're going to load up the version where it is still a terminal 5th wave, not the failed 5th wave. So this terminal wave would likely have to go below the previous lows. I at this point, you made this higher low here. If you're going to continue in this chop pattern and it's a flat pattern with a terminal impulse, maybe the 5th wave of this terminal would fail the 3rd wave, possibly. But I think we have to get lower than this, this previous low, just because otherwise we're, how can the 3 and the 5, be lower than the 1 in that way? Then that really feels more like a triangle, and we could be doing what the other thing's saying. So in that sense, I think something along these lines, maybe a failed 5th, oops, could be, but we can feel safe to bring down to this box, because again, this needs to be at most roughly probably 78.6% of this 3rd wave. Otherwise, it's too big, because it starts getting equal or bigger than the 3rd wave, and then the 3rd wave becomes smallest, and then it really invalidates this count. Okay, so this is a terminal impulse pattern count. It's still a flat pattern C wave, and wave 5 is about 78.6% of wave 3 in this type of idea. And after this would complete, then we would get the higher degree impulsive wave. Oh, and that's what I wanted to say as well. Here, this wave here, sorry, yeah, it is a wave. It's technically a mono wave. This bar is a mono wave, and this bar here, it's about $5,000, I believe, in price distance. Yeah, it's about 5,600. So in my opinion, the daily move, which is going to show the reversal, it has to be bigger than this candle. It has to be bigger than this candle, because it's the start of something new for real. in my opinion now, and I will see that this becomes maybe the start of the two wave here. Well, no, maybe if it's terminal impulse, then maybe this is still the beginning, right? It's a big fast move, and it's probably the beginning of the C wave of an ABC pattern, okay, of this terminal impulse. And that's the thing, a terminal impulse or the triangulation is going to fit a 3 3 3 3 3 5 3 waves, 5 corrective waves. A terminal impulse, 5 corrective waves. A triangle, 5 corrective waves. So that's the basic idea that we've got going on there with all of that. So either way, the construction of the patterns will be similar. There'll be corrective waves. And that means that in one way, this is good because we're going to be narrowing down the count. It starts to say, okay, something much more clear is coming and an ending is coming. Or it also tells us what would come after this. Would we be doing a flat pattern C wave where this is a 5-wave impulsive move with a terminal impulse pattern for the 5th wave here? Or is it going to be, and we'll see, some sort of complex combination where you maybe have an ABC, an X wave, and then a triangle. So some sort of zigzag X wave and triangle combination here, which would also involve a 3 3 3 3 3, 5 waves of corrective moves. And so that's the thing, but the way that it plays out might tell us what's coming next, and also the post corrective action and what's happening might tell us what's coming next. But by then it might be too late, and we want to just take a look and see what could be happening now. Of course, there's always the option that this is what just happened, that this is not a flat pattern, okay, and that it's not also an ABC of something, but that it's composed of waves from other patterns. For example, this B wave itself could be a failed 5th wave or a terminal 5th wave impulse of a previous pattern. And now we're just starting some sort of ABC zigzag and whatever. Okay, possible. But I think so far we've been pretty decent. And apart from my sense of euphoria of a reversal, I guess we've been watching this downtrend for so long, and it's been coming to fruition that all of a sudden I really felt like I got left behind here in the sense of not a FOMO, but a oh wow, something happened which was not expected in some sense, like this big of a move. In that sense, the thought was, oh, okay, so now something has changed, and but that's not the case yet. So as I'm saying, this $5,600 candle, I think we're going to be seeing a $10,000 candle to reverse this. It's just going to be that way. Maybe eight to 10,000 as the minimum candle, because to get that kind of move, let's say from here, okay, let's say we're somewhere here and we're getting that kind of $10,000 move. Yeah, it's got to be something that like nearly breaks this whole space here without anybody getting a chance to get in. It just has to be that, and too much has to be taken, and then there can be chop where shorts and longs can get liquidated and whatever. But at the low of this whole move, there has to be something which reverses so fast and so big that unless you already had it set and you got in and whatever, and you whatever it is, you got in, then that's great. So anyway, but that's more for traders. At this point, it's like accumulate when you can, as a blessing, and yeah. Will there be a time when advocating self-custody is a wrong think? I wonder. Okay. For some actors, it already is considered a wrong think. They are chastised for their wrong think. Okay, here we go now. Okay, so what is going on here now? We previously had a 1, then a 2, and a 3, and a 4, and a 5. With this terminal triangulation here, we might be, look, we already are showing breaking and chopping of the 2 to 4 trend line. So maybe the 4 also wants to chop it, but then it's a bit too much. And also I just feel like going down below the 40,000 level, I just don't see 40 being broken again. But who am I to say anything? Look what happened here, and the whole sequence of events from up to down has caught me hanging by a thread. So who cares what I think, really? It's just, well, hopefully you're getting something from what I think. Otherwise, it's a pure waste of time, isn't it? Yeah, so let's say this kind of level here could be reasonable, 40K in turnaround, psychological, whatever. And yeah, and if we measure these and compare them with each other, you might be able to find some sort of pathway. But I think something that overlaps, you get the 4 overlapping the 1, you get the 3 probably bouncing around here. But when we go look to the left, we start to see areas here that could also be coming into play. And that's where I think, for example, this 5th wave might come down, let's say to here, where you start getting this level of, sorry, this level of stuff here. Um, uh, Even wicks down to 29 are still in play, but I think that means, yeah, then you're breaking the channel below. You just don't want to be stopping around this channel line itself. You want to be doing something else in order to confirm that you're done a flat pattern. You want to be either breaking, turning around above or below. But anyway, okay. So yeah, these kinds of levels, that's basically the idea. That's basically the idea, some sort of terminal impulse pattern here. Okay, so let's watch that play out. Interestingly enough, the Ichimoku cloud on the daily has proven its strength, has proven its worth. What interesting action here. It was like from this move here, it was just begging to be um, to be reached, and the price did go there. It went there fast, but it wasn't quite there. So it hung around for a little bit, and then it dropped away, came back, broke right into it, and now it's back out into 20-day. Didn't even hold. Like you couldn't even get a daily close here at 40, and I guess that would have given too many people time to go short. That's the thing. When it's breaking through, it doesn't, because there are other factors like margin and liquidations. It's not just a pure spot account, or sorry, spot market. That's why, yeah, we got to be watching for unexpected moves and that sort of thing. So anyway, this is the basic idea. That's the terminal impulse pattern that we're looking at in this count. So thanks for watching that one. Now we're going to move into the other another possible count, which is a 3, a corrective count. And it would be similar, but it would probably end up being more of a sideways action triangle. Maybe it would point down a bit, similar to the impulse. I mean, very well could. But in that case, now we start getting the higher lows, and so that shows strength, that shows potential, and there's just. However, the question is, does that make it too easy for the market to determine that it is getting progressively stronger? Now, having said that, it also forms a nice potential for some sort of A, B, and then further C pattern to the downside. And so in that way, maybe it will allow the bearish people to consider that the bearish participants will consider that that's where it's going. So for us, that's why I think really honing in on the counts and taking a look is going to be helpful for us. And I think already the thought process has been reasonable. I just thought, wow, we had a shift of narratives all of a sudden, and it was explosive again. So whatever. But it's also showing to be very volatile and disruptive and uncertain. So yeah, it just makes more sense that the market chops. How long is it going to take? Well, maybe a month. If we look at relationships, I did a little bit of relationship assessment. But in the next day or 2 or 3 or whatever, we can look at a bit more details, because these are daily candles, so it's not going to just complete in one shot. And I don't want to throw too much at you at this time. So this would be a C pattern where the whole thing is a 3 wave. Let us show you what is going on here in this count. Here. There we go, and there we go. All right. Oh, let's enable you, Bollinger Bands. Well, you deserve to be here too. So what have we got here? This ABC would involve a 3, and a 3 here, which means it would be an ABC, but it would not be a flat pattern. C wave of an ABC, it would not be a flat pattern, because the C wave would not be a 5 wave impulse move. Instead, it would be a combination, a corrective move. And in that case, then we would be moving towards a D wave as the next turnaround. So if we are going to a D wave, I don't know if it has to be a big, huge $10,000 candle or something like that, but that's just the sense I'm getting. Like, for example, if we go from here, yeah, that's so convincing right now. I feel like maybe maybe it's not one $10,000 candle, maybe it's two $6,000 candles or something like that. Okay, maybe it's gonna be three $5,000 candles. You know what I mean? It's just gonna be such a huge, fast move, and I think it'll just be like straight up big fat bars, not a lot of wicking. And if any wicking, it'll just, it'll be in something like this, insignificant, where the price just keeps moving up very strongly. But yeah, see, this right here is $10,500. So I think the price will, when it's time, I do think that is a reasonable thing. Either 10,000 in a day or like 15,000 in 3 days, something massive like that. Okay, cool. So how am I counting this one here? How do we see this here? Instead of this being a one wave, we would still keep it an impulsive wave, but it wouldn't be a one wave, it would be an A wave of a zigzag. An A wave of a zigzag is a 5, just like an impulsive 1, 3, or 5 wave. So an A wave is a 5, the B wave is a corrective 3, and then a C wave, which is another impulsive wave, a 5. Okay, so a zigzag is made up of 5, 3, and 5. The other option, but I'm just not choosing it because there's a lot of nice definition here, and it just proportionally looks like the same degree as a triangle that would play out here. You have one zigzag here, it looks like a proportional triangle here. Another zigzag here looks proportionate to this triangle playing out, and then the combination of it, zigzag, like the whole thing here, I think feels reasonable here as well. So that's possible. Okay, the other option is, counting it better, might find actually that this is a zigzag here, ABC, and this is an X wave. And then we have another ABC and another X wave, and then an ABCDE triangle, so that we have a triple, and it's a zigzag, X wave, and triangle. But I'm just choosing this one. It just looks, feels, and seems simpler, and whatever. It just, yeah. Now, and also at that point, I think it doesn't change anything, because then it's still not a flat pattern C wave, and we're still going to a D wave. And I feel like that matters more. I'm not trying to be super like crystal ball or something like that, I think. But yeah, so what are we thinking here? The next thought is this X wave. It probably ends here then, but either way, maybe it ends here actually. But the thing is it more than 61% of the zigzag? And the answer is no. We're going to retrace this whole zigzag. That's the other reason this X wave is like so big compared to the individual zigzags, that the individual segments here, like this. If this were to be its own zigzag, this X wave is big. Anyway, this X wave doesn't retrace more than barely more than 38.2. It doesn't retrace to 50%. So it could be an X wave here, and it's basically the same degree as the move down. Maybe it's, so it's not more complex, at least, which I don't think it should be. Okay, so that's that X wave there. If we were actually to instead move this down, we're going to take it from the beginning of the third, or the C wave. I have to change my language here. It's not a 3 wave. It's now a C wave in this count. And in this case, it would have retraced more than 61% of the of this C wave. So just doesn't. Sorry. This C wave would have been its own ABC zigzag. So this X wave would be retracing more than the whole ABC zigzag, more than 61.8%. So it just doesn't seem right. So so far, that's why I'm holding this ABC count with an X wave here, and then a potential triangle here. And we've got this Ichimoku cloud to continually act as resistance. Maybe we're going to go up first before we go down again, but what I just think doesn't really matter at this point. Yeah, like I said, maybe it's just up to the 20-day and the Ichimoku here, and then further dump down. But looks like also it might, if it's going to alternate between the A and the C, then the C is probably going to take more time because the A is pretty quick. And in a contracting triangle, that would make sense. We have a violent A move down. So in that sense, also, if the B wave, whatever, it doesn't matter, it could be valid this way, or if it takes a bit more time too, and maybe somehow comes back up here. Like, the market is crazy. You know, imagine it comes back up towards like a 43 or something like that, whatever. Anyway, so we're looking for the B to D trend line, wherever that's going to be laying out. And yeah, this C wave might take, you know, 1.618% of, or 161.8% of the A wave. So it might land it around here, around end of towards the 20th of March or so. Anyway, so that's that kind of idea. So we have some sort of potential. We have this ABCX, ABCDE. That's what we're working with for now. If it's going to play out like this and then have a D wave afterwards, and we can take a look at that. So there you go. I would like to also mention that I'm not super convinced of any of these counts, really. And I mean, just humbly, I'm doing my best, and then so far it's doing well, but it's not easy. And that partly because of things that just aren't lining up so nicely. One thing here is we have the C wave touch a channel line, which is cool. So we end up with a 0 to B trend line with the C wave here, fine. Sorry, the 5 wave of the A, sorry, C wave, my language here. I'm just talking about the A wave. We have the A wave at the trend line, okay, to the B wave. So we get a 0 to B trend line, but the C wave doesn't touch the trend line again. It actually finishes away from the trend line. This is a proper channel. This is, you know, like a parallel channel tool. So there's not, you know, there's no discrepancy. It's parallel, and it doesn't touch it. And that means that it could actually be finished here. And what does that mean for this price action? So it's kind of unclean. Maybe there's a world in which a trend line like this is allowed for the move, and then you can say that it's an X wave, or maybe this is the C. That's kind of maybe why I was calling it a C just now, because you have an ABC and then an X wave. That would make sense if the C ends at the trend line, but it would have to end at the 0 to B trend line. We would have to be using a 0 to B trend line, and this would probably be a B right here. So overall, I'm not clear on any of this action, because if you start pulling in a 0 to B trend line there, you're already cutting off some of the price action that happens further down in this like through the X wave and then through the next zigzag. So it's kind of ugly as well. So, but again, having said that, I'm using Neowave logic without constructing a proper Neowave chart, cash data chart. So in some sense, I'm already handicapped here for myself, and that is what it is. But I think the logic really helps, and it makes a big difference. So this is the idea here that we're currently in. I also want to remember and remind that this zigzag has a pretty clean, you know, 1-to-1 or nearly 1-to-1 A to C. So that's pretty hot. And yeah, I'll do a bit more research into these kinds of formations and see if anything else comes up. But other than that, that's the idea for the complex combination correction that leads to not a flat pattern C wave. And we have instead a D wave coming. Okay, good. And interestingly, Fibonacci wise, if we extend from the zigzag A to C, the A wave itself is roughly 38.2% of this whole ABC. And if we measure, like we've done before, from the C wave, which formerly we were calling the 3 wave when we were doing this measurement, we would have it A wave at about a 61.8% of the C. So Fibonacci wise, it lines up pretty nicely overall, and allows for this triangle to have the lowest wave down here, and it's just very nice. Okay, fine. Very cool. Another option though that would be interesting would be a triangle that slopes downward, similar to a terminal, but then in that case, it would be really difficult to determine whether this is a flat pattern that's ending or if it's going to a D wave, unless we really, I think in the case of a D wave, it would, firstly, it would be counter trend. Okay, so it would probably be happening slower than the C wave or the A wave, we would hope. The other thing too is one reason why, well, actually, I shouldn't say that. I haven't done enough time analysis to really say, because now I'm just starting to really consider this as a possibility. Then we move into a D wave. So once this thing is over, even if it's whether it's a terminal impulse of a flat pattern C wave, fifth wave, or it's a triangle of a correction of not a flat pattern C wave, we'll know, because in the sense afterwards, if it's the flat pattern, then we're in a new impulse, and we are in a new bigger degree impulse that's the same degree as this whole correction. So it in itself is going to be massive, and so I can see it being much faster and bigger. Whereas if it's a D wave, yes, there would be a big fast move to begin with, but then it wouldn't reach, and maybe it wouldn't even exceed this B wave in the same amount of time that, let's say, a big impulsive move after a flat pattern C wave would happen. So that I guess that's what's going to help us. Okay, but that's afterward. Yeah. So there you go. That's for that. That's, I guess, really it. What was the other thing? Oh yeah, the weekly time frame. Let's look at this on the weekly time frame. Just as a reminder. Oh, some of these things are not clean. That's okay. I'm going to, instead of this purple channel, I think we talked about it last video, and I think we're far enough away from it, and we can keep this other channel, and it's on the daily, so we will move it to the daily. Wow. Actually, probably keep it on the hourly. And definitely get this out of there, put it on the daily and the hourly. And this can go to the daily or hourly, away from the weekly, and this can go to the daily and hourly. No, not even the hourly, forget it. Okay. Actually, we'll keep it, because we're keeping the ABC. No, we're going to put this on the daily. Okay, now, after having said that, here we are once again back in the Ichimoku cloud. So by the chances of the price moving down by Sunday are quite good, at least to the 35, 36,000 level. But anyway, we'll see what ends up happening around that. Maybe that'll be a beginning of the week thing for next week. Maybe the beginning, it'll be the opposite. I can imagine that, maybe we can start getting opposite candles. We'll get this time here some sort of, well, no, if the C is going to take longer, it doesn't, I'm just not going to bother. It doesn't matter. If the ABC, DE, if the C of that triangle is going to take longer, then forget it. But anyway, here we are, X wave here, A wave here, B wave here happening, whether it's over or not, we don't know. C wave here, D wave here, E wave here, and then we're out. But actually, this is even longer. The way that I had it drawn on the daily. Let's just leave this open here for 1 second. Let's take this, put it on the weekly as well. Let's take this, put it on the weekly as well. And for fun, let's take this, put it on the weekly as well. Okay. And let's go back to the weekly and say, all right, yeah, oh, wow, yeah, that totally makes sense too. I mean, interesting, very interesting. Okay, And if we were just to play a little time game for fun, let's take the ABC zigzag. And then the X wave and the triangle. Wow, they would equal each other 1-to-1 if you add the X wave and the triangle. That's fascinating. I didn't do that myself. In fact, it's just based on these moves themselves and just using some of the triangle pattern logic from the Neowave method. So anyway, so there you have it. That's pretty interesting. Where just to see that again, I mean, look, again, forget it. We're going to watch this play out, but that would be fascinating. Okay. But that would mean that we're going towards a D wave if we're looking like this, most likely. All right. So stick around and let's find out, and let's keep going at this. This is pretty enjoyable. That's it for me, though. I don't have much else to say. Yeah, I thank you for watching. I hope this has been helpful for you, and it's been enjoyable for me. And I've been going probably for 30 minutes or more now. Yeah, it looks like it. So hope you're watching still. And if it's good for you, that's good for me. Because I just enjoy being of service in that way. And I'm wishing you the best. Love, peace, happiness. Okay. Goodbye.